Hey, it's Michael Saul, but everybody calls me Tiny, so you can too. And this video is the banks are acting like crap, but does the market even care? Plus a stock or two to watch. Actually, there's three. We'll get to them in a couple of minutes. This is the market analysis for the week of June 5th, 2017. So, to answer the question right away, does the market even care? Nah. Continuing to trade higher here. The S&P 500 extended its gains out of this small little flag here and looks now to be headed to 250 on the SPY. Just continuing to extend this monster rally, and this is just going back to 2016. Of course, we can go back even further than that, and we could see, let's not go all the way back here to 88. But if we go back, you see from here in 2009, the low down here, and just boom, just incredible move here. And the market does not look like it wants to slow down. Of course, if you have been watching my videos for any longer than just this one, you know that my opinion is that we are going to have a pullback. We did not have a sell in May and go away event because it's June. But are we just going to keep ripping all summer? We could, but I still believe we have a pullback coming, and I believe that it will take a lot of people flat-footed. So one of the main reasons is the way that the financials are acting. Now, granted, the banks did get out ahead of themselves, but so did the S&P 500 on this rally, and it's still going to new highs. All right, so let's get to the banks in a couple of minutes. Let's go through the other indices. NASDAQ 100, just monster. The Qs just ripping. Looks like 150 is possible there. Before, of course, I'm talking about before a pullback. The Russell still lagging, but you can see here closing at the highest high in a couple of weeks here. Overall, it's in a range. Here's the mid-caps acting a little bit better. Didn't get a breakout either, though. And then the Dow popped up to a new high. But the Dow's also lagging. So the Dow mid-caps and the Russell, I throw out the Dow and just care about the small caps, really, the Russell. But you can throw the mid-caps in also. They're lagging a bit. But the NASDAQ and the S&P 500 are out front. It is a strong market. There are no sell signals here. So while I could sit here and think there's going to be a pullback, until the trigger actually happens, long is right and short is wrong. Intraday, different story. There are still some nice setups, as long as we don't have the real crazy narrow, well, they're not crazy, but the opposite of crazy, the sane, the real uber sane narrow range candle days, right? If you have some range, then sure, there's opportunity both ways. Wednesday was a really nice trading day because of the way we opened up, and then we sold off, and then we got the nice bounce. So it was a pretty interesting day on Wednesday with the gap filling from a few days before, etc. All right, so let's look at some of the sectors. Semiconductors acting well. Let's go through some of the big ones. NVIDIA in a small bull flag. Here's Intel coiling up here. You can see if we grab the trend line, you got that, and then you got that. So it's all triangled up there. How about like an ADI, into 90 and a big reversal down. See if it holds the 50-day moving average here. Here's a Micron acting okay as well. How about like a Brooks Automation? You see here it's not a great consolidation as far as symmetrical wise, but it is in a consolidation here right above the 20 EMA. Let's go to broker-dealer, then we'll circle back to the banks. So the broker-dealer acting a little bit better than the banks here. Still not acting so great. Kind of surfing that 50-day moving average for the most part. Did close above it, but if it gets above 220, then yeah, I could see it looking a little bit better. But look at Goldman, all right? So Goldman, even though it's a broker-dealer or considered part of the XBD, I believe still, most analysts and people that I read are lumping it in as just a bank. But let's go through the XBD See if Goldman is part of it still, which I think it is. Yeah, there it is, right there. Right, so here's the group. And I mean, overall, the sector's acting okay, but the individual stocks, there are a couple here, like BGC Partners, pop in there, but most of them are just lagging along here. Here's Knight Capital, that's a buyout. All right, so if we go to the banks, you can see the banks are acting definitely worse than the broker-dealer. Still, is this a sharp downtrend? No, come on. I mean, look at this nice pop-up off the lows in 2016. Still up very, very nicely there, but look at the pattern. It looks like a complex head and shoulders. It's below the 50, it's below the 20 EMA, and it has the 200-day moving average right here that has to be watched. So look at some stocks here. You got Bank of America, it loses 22, could get a push down to that 200-day moving average pretty quickly. JP Morgan is right above its 200-day moving average. Citigroup's still acting okay. All right, Citigroup is still acting okay. Northern Trust, more sideways than anything. Here's Zion's. Watch that 200-day moving average, and notice the way it's consolidating right above it. So there's a chance that if it pushes through it, it could go lower. Back to Goldman. Look at Goldman sitting on the 200-day moving average. I mean, again, the market is just like, hey, you know what? Let's go. But, I mean, the financials are definitely causing me a little bit of a concern. Like, no sell signal here in the market. One of the reasons is the insurance sector. It's acting better than both the banks and the brokers, and you can see it's in its consolidation here. And that looks like it may be ready to try to get a push as well. I mean, just tough here to see the market, to think that the market's going to continue to rally like this with such a drag down in the banks. But look, it's been happening. So I'm not saying, oh, it can't happen. I love these people that give these, like the correlations are perfect. They're not. Obviously not. S&P 500 at new all-timers. Banks are like, yeah, we should be at a minimum chopping here if you're listening to the banks, but perhaps even seeing some weakness. All right, so that's my thoughts on the banks relative to the market here, and one of them is going to catch up. Either the market is going to start feeling some sluggishness with the poor showing in the banks, or the banks are going to catch up and start to rally. You get some bullish rotation into them. So that's the relationship that I'm watching here. Let's look at a couple other stocks. Amazon finally broke and held 1,000 after a couple of times it tried. Couldn't hold above it, but it did make it for the end of the week. Look at Apple. Right, look at the Friday move in Apple out of this little consolidation. Looks like it wants to go. Alphabet, although you'll always be Google to me, looks like it wants to bust above 1,000 again. Very stretched here, tough for me to enter in here. But wow, I mean, just what I like with stocks hanging around big numbers like 1,000 is, is it going to push up, and then what happens there, right? If it fails back below 1,000, could be good for a trade on the short side, right? Here's Netflix, also hopping. Look at our Caterpillar. Popped to a new high out of the flag. John Deere still acting strong. A lot of stocks acting really well here. All right, let's look at bonds. So bonds got above the 200-day moving average. So now you got bonds at multi-month highs. Now, granted, all it is really the top of a range when you think about it. Still got a lot of work to do to consider it in a true uptrend, but it's a start. I mean, it's at the highest level it's been all year, and dating back to the post-election here. So got to watch this. Are bonds in the market going to, and by the way, that correlation can exist. The market and the stock market, and bonds can move together. They don't always move separately like people think. All right, but let's see if that's the case, or if strength in bonds causes a little weakness in the market. Here's gold. So gold was coiling up. It released to the upside here. I'm not really interested in calling it bullish until it gets above this high up here at 124.80. How about oil? Yeah, so oil looks like it wants to try to break down here. And I think if it can break below 9, it can go down to these lows in the mid-7s. All right, so market ripping, no sell signal, but I think we've been overheated, but I think now this stretch right here, pivoting off of this low just before 235, I think that we're overheated on the short term, and I am expecting at least a pause. I don't have a sell signal, not looking to sell into this or any insanity like that. Okay, but just be watchful. Continue to trail stops. I wish I could have a firm, we're definitely going to 250. I mean, it looks like we're going to try to go to at least 250, but that's still a couple of percentage points away from here. But again, when it looks this obvious, that's what gets me nervous. And I know buying dips has been a gold mine the last few years, and you've had to deal with some heat along the way, but it's still been working, at least for the overall market. But that doesn't mean that it's going to continue to be that quote-unquote easy. In my opinion, it was never easy. But, there's always the challenge. There's always the push against, like, okay, well, is this time it's real? Is this pullback going to work? That's why I'm a big believer in looking for coils, stuff like this, or stuff like this, and then you know where you're wrong right away, right? With a pullback, it's tough because you're saying to yourself, okay, is this the pullback I'm buying a new highs? Oh, look, I'm right. Oh, no, I'm wrong. All right, well, is this going to be the pullback? Oh, no, it's below that. Do I get out here? Why did I get out? It comes right above it. Okay, I'll buy it next time it's to the 50. Oh, no, it's below it. Oh, no, okay, well, let's get out. Wait till it's, okay. So, all this is I'm not saying you should never play pullbacks or rallies and downtrends, but they are harder than looking for the rotation from volatility contraction to volatility expansion. All right, so that's what I got for the market. Let's look at the three stocks that I have for this week. So the first one is Ingersoll Rand, and it is in a nice consolidation here up at the highs. Again, if the market is going to continue to keep going, I like looking at these types of patterns because you know where you're wrong pretty quickly. Next stock to watch on the list is BPI, okay, which is Bridgepoint Education. And this had a nice flagpole here from sub 13 to just about 16. This is a news event, most likely. How about that? Earnings. There we go. If I could speak, that would be great. But it is in a consolidation. It is in a flag here. Wait for confirmation. If price comes dribbling out, well, then it's not a trade. Okay, wait for confirmation and make sure stops are on. And then finally, look at this little beauty, little cheapy EVRI, Every Holdings Inc. They're in the gambling sector. They do like the real games and then the slots and the poker and I don't know. And then they also do like a cash thing for gamblers as well, whatever it is. But look at this move since the beginning of the year here. $2, almost $2 up to, what is it, 7 and change up here, right up to 720s. And it is coiled up here. See if this can break out above 7 and get going. Again, if it comes out the bottom, then no trade. And you wait to see if it tests the 50-day moving average. Any questions, as always, tiny@attackthemarkets.com. Join the list. It's free at attackthemarkets.com for intra-week updates. Have a great trading week. I will talk to you in the next video or via the email, intra-week emails. Okay, take care.